going for higher capital reducing. So this was done essentially, the introduction of Basel I and Basel II was done aiming at to bring it international standard or convert it in terms of global standard, both in terms of risk management and capital reducing. Then I'm sure all of you have a savings account. The moment you have one ask, give a photograph, where do you stay? What is your identity? Where the person is supposed to be there? The KYC now came in. KYC has become more as a mantra now, know your customer. I always say you must know your customer. It's not for the ritualistic part of completing the formalities of identifying the bona fide of law, but you know your customer beyond that. Along the KYC came anti-money laundering, which is a global ratification. And our anti-money laundering policy, which have been passed in the Parliament, implemented in the banking and service industry, is at par with the global provision of the policy. Now, these are the measures that have been brought in to make the system healthier, to make the system robust. I'm sure you have come across the expression, asset liability management. It is very simple, but you generate a lot of it. Suppose I give a simple example. If I take a deposit from you in 15 days and give that money for 1 year loan, there will be mismatch in the maturity of the duration of the resources and your assets. So you need to go on making a balanced approach within a given tolerance limit. You set for yourself the mismatch up to what you can go. Because every mismatch has an implication in terms of revenue, in terms of profit. So these are the supervisory position of tweeting. Along with that, is obviously the brought in risk-based supervision. And the risk-based supervision was eventually, will be replaced by off-site surveillance which they have already. What we're trying to do is, with the introduction of core banking platform and all the banks network, we are trying to do on-site, off-site, not on-site, off-site inspection. We have started a pilot. We like to see how it works. But you cannot have absolute or 100% off-site because there are certain physical assets we need verification, which will have the requirement or imperativeness of going for part off-site, on-site also. Now, institutional and legal measures, again, why is required? Why institutional and legal measures? Again, to make the system transparent. So, two major action legislation was done by the Parliament, the Surface Act, which has a huge impact that changed the process of recovering bad loans. Surface Act 2002 got further amended, incorporating the demand or expectation of the borrower, defaulting borrower. Then we had Lok Adalat, which can give a quick decision without going through the rigmarole of going through the rates and legal proceedings. We had CDR. All these processes are going to brought in over a period of time. Major three important things happen. One is establishment of CDR, Canadian Information Bureau. In the advanced countries, the moment you go, you have a unique number for yourself. Take USA, you want a social security number. And the moment you go and get information, they will be able to give information about how many credit cards you have, how many credit cards you defaulted. But in our Indian system, it was not available. With the institutionalization of the civil getting to information limited, we have been able to do a lot of things. Today, before giving a loan, I can go back and see the civil data whether this borrower, potential borrower will default. You have to understand one thing, that every money you borrow or lend, there's a money left kept with your trust with the public. And there's a cost. And if one loan goes bad, you have to provide for that loan, and that's the cost which is impact on your revenue stream and on the bottom line of it. So what single does is they provide a data pool. Based on that, you can do a due diligence to select a credit whether I should go for this loan or should not go. It's sort of horoscope of a borrower. It will tell how many times you have defaulted, what the credit worthiness of borrower. Sort of no horoscope, not very detailed horoscope, but it gives us. Now, TM Corporation, another very important institution, which was instituted. Bankers make payment, huge payment. You maintain an account with me, Mr. maintain accounts with some other bank. When the settlement takes place, there is no centralized institution in the forum which can be done. But this is CCIL, of course CCIL does the payment settlement as a guarantee of settlement for fixed products and money market products. Okay, so you are seeing that slowly you are putting in place a lot of institutional initiative which is going to take care of that. Okay, now this is the scenario took place in the last phase which you have seen 1998. Now the question remains, where do we go from here? We have really made ourselves quite good in terms of the full adequacy, in terms of asset quality, even if we compare ourselves with the. But having said so, as I said, that capital adequacy is not really, it's a big challenge for us to resolve. Now, a banker is essentially, regardless of macroeconomic situation. They operate in a macro environment wherever you go. And growth of the economy has a direct bearing of the performance of the bank. You have seen last 3 years, you have seen 0607, we have, 050607, we had almost 9.6, 56, 9.6, 067, 9%, this year we are going to have almost 8.3 or 8.4%. Who triggered this growth? How a GDP is growth is essentially performance of creation of assets or creation of activity, generation of employment. Last 3 years, 0708, of course, the credit growth of the banks have been close to 22%. But if you look at it, 06, 04, 05, 05, 06, there will be around 33% increase. I'm sure you have seen that FM is saying, please don't stop loaning to the productive sector. Because if the GDP has to grow, if the industry has to grow, if the service has to grow, if agriculture has to grow, they need money. And they kind of money, organize the entire money of their own. That money has to come by a lending process of the commercial banks. We have seen the 3 years, beginning 2004 to 7, agricultural credit was doubled by the commercial banks. Particularly retail, housing, automobile, education loan saw a mammoth growth of almost 40-44% each year on year basis. Every penny you spend that gets reflected in the economy and the GDP. So there is interdependence, or I would say interplay between the GDP and the financial sector, more so for the bank, which really acts as a catalyst for the growth of the GDP. If bank does not loan, obviously no economic activity. As I am saying that why do I believe that it's possible to do 8%? Because first quarter credit growth has been close to 24%. That's a very, very healthy development. Now, if you have to do so, you have to have a sustainable credit. When do bankers get money? Bankers get money from capital. Bankers get money from deposits. And market liquidity, all the time you have heard there's a liquidity crisis or liquidity hangover in the market. that dictates how much of money available in the market. I show you the domestic savings is almost 24%, but banker is the only source of the entire money falling. The money is going to mutual fund, money is going to equity market, everywhere money is going. So, what you need to do is you're planning your capital. Now, this is not again, unending process. It's not an open-ended issue. As I said that if government holding cannot come down below 50%, where from the capital comes in. Today your equity market is not good, where from you bring the money. You go for issuance of the bond for the capital raising, but there is again a norm for that beyond which you cannot go. These are one of the big challenges. I think this challenge can be addressed by different solution. One of the solution could be government need to revisit as it was the cap of 50%. We need to develop a bond market. Bank can go out in the market, put bond, either general nature or exclusive nature to fund only the infrastructure. Today, we are deficit almost by, I think 1 lakh megawatt power which we need to have. And we need billions of rupees to really minimize the gap. We can completely take over up the gap of the infrastructure facility logistics support. So, bank has an issue that they have to grow with profitability, with quality assets, with compliance, and also with the raising of the. Because if you need to grow, you need money to fund your loans, you need money to write off your bad loans, you need money for your skilling of your staff, which is the most important. Now onwards, I'll come to the issue of 09, because everybody is talking of 09 and WTO compulsion of opening up the banking sector. We are signatory to the WTO, we have to do it. I'll come to that point a bit later. But today, 2008, we are talking about only 1 year, 2009, 2010. The question arises, are we ready for the competition? As an insider, I sense that we are capable to address the competition from the front. I don't, because when ICICI Bank, HDFC Bank, Axis Bank came, everybody failed to know, no private sector banks are supposed to close all their shop. Nothing happened. They grew at the rate of almost 20% each year. Honestly, what they did do, they need to just change the strategies. They need to adapt the business model which is acceptable to the business. Lot of time in my career I was walking business. Public sector I never believed in going out and marketing business. The other day there was a seminar on CRM. In this auditorium, I'm just talking that yes, banking are doing CRM much aggressively than other industry because they feel it's a question of the survival. And we have been able to prove ourselves that we can survive with a robust system. All of you are aware of the Darwinian concept of survival of the fittest. And when changes takes place, somebody cannot take the pain of the change. So somebody has to perish, other will survive, other will go and grow healthier and more prosperous. If you revisit the issue of National Committee report, category of banks, national bank, global banks, third is the domestic national banks, fourth is the regional banks. I think those sort of model is going to come, not to say the fact, one of my colleagues are going on strike today and they went on Monday, is a compulsion of the market. You need to consolidate, you need to enhance your skill of operation. And in the common sense, I don't go to management concept, the scale of operation determines your efficacy as a business performer. That's going to happen. And the also got merged, take my words. In the precursor for the merger of operation in the banking industry. You will find that other banks are good. Now the merger has been smooth because it's the same group, the same technology, same processes, same business. And I might be surprised if you see that all 7 associates of State Bank of India got merged with State Bank of India by March 2009. If this feedback is good, if the process transition is good, I don't find any reason why other banks will not get merged by March 2009. Just imagine a scenario, these banks, these 7 banks will bring in to State Bank of India balance sheet size 2.4 lakhs crore of business. State Bank of Hyderabad, State Bank of Patiyala, these 2 banks put together can bring in on a platter 1.8 lakh crore of business to State Bank. We are talking about balance sheet size integrated of close to 11 lakh crore of business. It's a huge number. But the point is the number enough? Now, I give a small empirical data that we need to grow global. We are talking of global dimension, global test. Now, if 5 banks of the country get merged together, starting from State Bank of India, if the same merged bank globally will be smaller than the 10th largest bank in the global. So it's not that the moment we get merged, you are going to a global play. It's far from that. You must understand that $43. If they grow $1, you have to grow for and in addition you are measured a balance sheet size, you are denominatized in terms of. So we are a dollar bank, we are a rupee bank, and we are 40 times larger in terms of dollar society value. But having said so, this is very large plan the global market, but will definitely move along the ladder to become first 50th or 51st or 55th if that happens. More important of operation is benefit of cost cutting, rationalization of benefit, rationalization of manpower. So when I see a value shape, calculation is one major dimension going to be. It's a fancy word to use all inclusive. Public sector banks in the industry have public sector put together 63% of the banking network in rural and city. I think the issue is that to reach the people who have not got the benefit of the banking, either by your deposit account or your loan. And our players have been taken care of at this, not fully by the microfinance. But microfinance business objective cannot be as generous a business objective of a government. We have a social objective, and that's what we need to see both the bank management, regulator, and the government policy makers. They need to work in coordinated fashion for an inclusive growth momentum, so that the benefit of GDP reaches people. Now, support sustainability to want to be a global bank. Payments is, I was talking of Payment Corporation in India. We have already introduced Payment Corporation in India, which is going to be the payment system is very good. Today, you want to send anything from here to Servant to Nagaland, you can do it. But you have to make the system. We have just started. You have to make the system much more customer friendly, will be reasonable or affordable cost. And that reasonable affordable cost can come and provided you can scale up the model. Next point I will say slightly revolutionary sense that I think time has come to see whether we can have immediately controlled single regulator. We are not to be told by the government, by the RBI, by SEBI, by the government agency which is looking after that anti-money laundering. So single regulators could we think of. I'm not saying to be done in the near future. It will not make a reporting compliance system much more easier, but it will really cut down the cost of it, which is tremendous amount of cost will be. We talked of infrastructure, we talked of technology, we talked of capital, but who's going to back that? They don't have time. The people who work. Today, if you ask me, my greatest challenge as the CEO of a bank was not profitable, was not anything, was not the compliance. Because my people, as upstream